Hello traders, hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the Euro dollar, Aussie dollar, crude oil, gold and German DAX. Now, firstly, looking at the weekly picture here, a rise from 2016 lows can still be only temporary, but it can be a deep ABC movement or maybe even a triangle if we'll stay sideways. So in such case, wave C is now approaching resistance. So based on two different interpretations, if we are in a triangle, then this should be a corrective rise. Well, if we are going to see more upside and retest of these 2018 highs, then this is going probably to be an impulse. So based on these views, I'm actually tracking two interpretations. Now on the left, as I said, an ABCX ABC formation is approaching resistance, or here on the right, I have this ongoing 5-wave cycle, more upside after a wave 4 pullback. So as you can see, we are approaching potential resistance based on two different interpretations. But still, before this resistance could be seen, we need completed 5 waves up within the current advance, up from 1.16 level. And that's not the case yet when looking at this 4-hour time frame. Here I see waves 1, you had a wave 2, a nice extended push higher for a wave 3, and looks like that now we could be stepping in this consolidation period. Also, we are approaching the holidays and end of the year flows, meaning portfolio adjustments could definitely impact this price action or even cause a very slow price movement on other markets as well, which will obviously have also some impact on the FX market. So looking at this Elliott wave perspective, I think that this fourth wave here, wave 4, could be a little bit more complex, maybe even deeper if we consider that these previous supports at 1.2050 up to 1.2120 are very interesting. Okay, so either this could be maybe unfold even as a irregular flat formation if the previous high is retested. But generally speaking, I think that euro could be limited on the upside in January. Now let's take a look on Aussie dollar, sorry. Now on Aussie dollar, as you know, we are tracking this bullish advance since market formed a very nice breakout here in November, and looks like that this advance is approaching some resistance here at 161.8 extension of this recent completed correction, but still on a smaller time frame, as I will show you, this upward movement appears incomplete. So looking at the 4-hour chart here, I can see here wave 1, you had a wave 2, a nice 5 waves up for a wave 3, and now again we have seen a very sharp drop in 3 waves. So looks like that there will be more upside. Now the question is if this is all from that wave 4, or maybe we'll see more upside after more complex correction. So in either case, I think that this pair has room for more gains, but I would not be surprised if we again test the lower supports. I mean, keep in mind that we are at the 38.2% here at 0.7410 level, which hasn't been triggered. Also, this sharp drop was quite fast and maybe too fast actually for wave 4. So we'll see how this plays out. I definitely would love to see something more complex here, especially if we consider that wave 2 was very quick and sharp, while then wave 4 of the same degree could actually be the opposite. Also, it's very good to keep an eye on this Hang Seng index. As you know, the markets will tend to be in positive correlation. So if we'll see more upside here for a push or rise into wave 5, then I think that Aussie dollar could also see more gains. Now let's take a look on crude oil. Now crude oil is definitely bullish here. Actually, if we revisit the monthly charts here, definitely a bullish reversal is significant, but still there will be pullbacks always on the way up. Okay, so actually I'm looking at two different interpretations. Both suggest that we could be headed much higher in the next few years, but as you know, we are tracking markets on a weekly basis, so actually I want to look what is going on the smaller time frame charts. Well, here on a daily chart, we are definitely very bullish as long as we are holding this trendline support, but the intraday pullbacks could be in the cards here since we approach this $50 per barrel, and also again, end of the year flows could even impact these markets as well. Looking at this 4-hour time frame charts, well, I'm observing this ongoing 5-wave rise still incomplete, but looks like that we are now stepping into this wave 4 after market reversed quite aggressively lower and now tested this trendline support within a wave 5 of 3. So maybe we are now in a wave 4 pullback, meaning more weakness could be seen on the short-term basis towards 45.50, and also the most important level will definitely be here around $44 per barrel. So as long as we are trading above this level, I think that any dip in 3 waves could be actually just a part of an ongoing upward movement. Now also there is divergence here on the RSI, meaning that sooner or later, yes, this crude oil could be see the limited upside, but as I said, maybe this fifth wave here is still missing before we may turn south for a higher degree correction. And ideally this correction will kick in at the start of 2021. Now let's take a look on gold. Now gold, as you know, has been turning very nicely to the upside, and so far it stopped at this falling trend line connected from all-time highs. So actually we do not have this bullish breakout yet. And even from an Elliott wave perspective, it's now quite tricky to say that we will see this breakout. Why? Because the rise from the lows to the current high of the week is not in 5 waves. It's actually still only a 3-wave movement. If you look here on the 4-hour chart, this is potentially wave 1. You had a wave 2, 3, maybe now wave 4, and more upside for a wave 5 to complete wave 1 as a leading diagonal, because we have seen an overlaps. So this is still valid count, but it's very hard to say that this will be that this is how the price action will play out. We definitely have to see these 5 waves up in place and completed leading diagonal before I can say that 1762 was, yes, low of this wave 4. Okay, so we will have to wait a little bit more here. I think that by the end of the week we will have answer what is really going on with metals right now, because keep in mind that if we just break this lower trend line support connected from 1762, let's say that we get a close below 1840, then I think that this should be labeled as a 3-wave recovery, meaning that then this whole corrective drop from all-time highs will become even more complex. And if that would be the case, then you know that this wave 4 will retest the 1760. So looking and having just prepared plan for this potential scenario here, well, I prepared the second wave count. It's still an alternate count, but it's very good for me to be prepared and turn to and shift towards this idea if we see market breaking this trend line. So here I would be looking for an ABC, XAUUSD. So again, it's a wave 4, just a little bit more complex. So now currently it's a very tricky timing actually to say where gold will be headed, since we need some more price data from the market to confirm one look or the other. Okay. It was definitely much easier to say that we are turning bullish when market made these first 5 waves up and then a pullback towards 18, 19. As you know, we were looking for a push higher, but now since resistance is holding, we have to be much more patient here. Now, if we see a break, as I said, above 1900, then this could be a leading diagonal, and I think any 3-wave drop could be again opportunity on the way up. Now let's take a look on German DAX. Now German DAX is definitely bullish and could see more upside, but again after pullbacks. And I said so many times, always when we have very strong year, especially some strong upward movement into the end of the year, well, maybe at the start of the next year we could face some pullbacks. So I would not be surprised if that would be the case here on German DAX. We're definitely still here in uptrend, but this rise from 11,400 has actually unfolded in 5 waves, and it stopped here at this resistance at the highs actually from February here. So what I love to see is a new pullback, ideally in a corrective movement. So looking at the 4-hour chart here, this was wave 1, you had a wave 2, looks like that this could be counted in a 5 waves for a wave 3, then you had a wave 4, and this was wave 5. So if I'm on the right track, then we are now already stepping into this potential corrective retracement that should be made by 3 waves. So I'm expecting more weakness here, and the support, the ideal one, much better for the bullish resumption would definitely be here at 12,330 up to 12,545, which is even more important because here we had this gap. And the reason why I'm also expecting this potential shift into this sideways consolidation is because we have here a divergence. Okay, so I know that this trend is very strong when looking at here on the daily chart, but I think that opportunities could be after pullbacks. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon. Bye.